Welcome to Smart Stock Watch. Today is May 16th, 2025, and we're diving into Mastech Digital's latest earnings report for the first quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Mastech Digital, a leader in digital transformation IT services, has just released their Q1 2025 earnings report, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Mastech Digital reported a total revenue of $48.3 million for the first quarter of 2025, marking a 3% increase compared to the same period last year. John, what are your thoughts on this growth?
It's a positive sign, especially in a challenging demand environment. The revenue growth is driven by a strong performance in their data and analytics services segment, which saw an 11% increase. The overall gross profit also rose to $12.9 million, with gross margins improving to 26.7% from 25.9% last year.
That's impressive. How did their IT staffing services segment perform?
The IT staffing services segment experienced a modest 2% revenue increase. However, the demand was below last year's levels due to market uncertainties, which is something to watch moving forward.
Earnings per share analysis. Now, let's talk about earnings per share. Mastech Digital reported a GAAP loss per share of 12 cents, but on a non-GAAP basis, they achieved 0.06 cents per share. How does this compare to analyst expectations?
Analysts were forecasting an EPS of 7.7, so the non-GAAP EPS of 6 fell slightly short of expectations. The GAAP loss was impacted by a $1.4 million severance expense, which was a significant factor this quarter.
That's a crucial point. How should investors interpret these results?
Investors should consider the non-GAAP results as they exclude one-time expenses like severance. The consistent non-GAAP EPS year over year suggests stability in their core operations despite external challenges.
Operational efficiencies and future outlook. Let's shift focus to Mastech Digital's operational efficiencies and future outlook. They reported a cash balance of $24.7 million with no bank debt. What does this indicate about their financial health?
It indicates a strong financial position. With $23.7 million available under their revolving credit facility and a DSO of 56 days, Mastech Digital is well-positioned to manage its operations and invest in growth opportunities.
And what about their future outlook?
CEO Nirav Patel expressed cautious optimism, highlighting their focus on strengthening client relationships and operational efficiency. Despite the challenging demand environment, they are committed to their long-term strategic priorities.
Key takeaways. In summary, Mastech Digital has shown resilience in a challenging market with a 3% revenue growth and stable non-GAAP earnings. Their strong cash position and lack of debt provide a solid foundation for future growth. John, any final thoughts?
Mastech Digital's performance reflects their ability to navigate market challenges effectively. Investors should keep an eye on their strategic initiatives and market conditions as they continue to adapt and grow.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Mastech Digital's performance in the comments below.